If you have not already done so, I would like for you to turn to page 82 of your textbook, and you will see something similar to what we have up here. I'm going to share a few things related to Chapter 4, and then we're going to get right into actually doing some transactions using T accounts. But the first thing I want to address is this chart of accounts up here. Every account, or every business, has a chart of accounts. It's just simply a list of all the accounts that they are going to use. If it's a small business, it might have 10, 12. If it's a large business, it might have thousands of them. But you'll notice that they're broken up into the categories that we've been using before, or the classifications that we've been using before: assets, liabilities, and owner's equity. We've added 2 more down here, revenue and expenses, and we'll actually use those in Chapter 5. But just to see a full illustration of a chart of accounts, I've put them up here. Notice that under assets, I have all of the various accounts listed that our company is going to use, and there's a number next to them. All of the asset accounts are going to be given a number that starts with 1. Now, if it's a really large business, maybe this digit might have 5 numbers in it, 5, 6 numbers. It doesn't matter how many digits it has as long as the first one is a 1. All liabilities are going to be listed with a number 2, or given a number that starts with 2. Notice we haven't used this before, but notice under this one we have 2 accounts payable. Instead of having just 1 account, we're breaking them up. For everybody that we owe money to, they're going to get their own separate account, so we know exactly how much money we owe that particular company. Under owner's equity, we have 3 accounts. In Chapter 4, we're only going to be using capital. Chapter 5, we'll start working with withdrawals. And we won't do anything with income summary until I think Chapter 10. But they're still owner's equity accounts, and notice that they all begin with the number 3. Revenue and expenses are going to have their own classifications. We've talked about revenue, expenses, and withdrawals affecting capital. And we're going to talk next chapter that revenue and expenses and withdrawals are going to have their own accounts so that we can keep track of what's happening in each of those categories. Revenue, whenever we assign an account, it's going to start with the number 4. This particular business only has 1 revenue. Some businesses might have multiple types of revenue. Expenses, they have very few expenses. Normally we'd see a lot more here, but expenses are going to start with the number 5. You're going to need to know how those accounts are numbered. You're going to be tested over that, and it's going to play into assigning account numbers in your ledger, etc. So you need to know the correct sequence. Now notice up here, when you are creating a chart of accounts, they kind of skip around. We have 101, 105, 110, 115, 120, 125. You can arbitrarily assign numbers to these accounts as long as they start with the appropriate number. I would recommend, if you're starting a business, that you actually do skip around a little bit, because as your business grows, you might actually want to insert another account somewhere else, and you may feel like it'd be better to insert it maybe between these 2 accounts receivables, or maybe listed up here above the computer equipment. In that case, you've got some other numbers to play with. Okay? Normally I would have you create a chart of accounts. If that's something that you want to do and you want to give it a try, go ahead and do it, and I'd be happy to look at it to see how you're doing. But what you'll need to know is you'll just need to know the 5 classifications and what number each of them start with. All right, moving on, here's our definition: a list of accounts used by a business. A system for numbering accounts makes it easy to locate individual accounts in the ledger. The ledger is a group of accounts, also referred to as a general ledger. You're going to have a book or a file, if it's a computerized system, that has 1 accounting record for each account. And we're going to keep them in the order that they appear on your chart of accounts. So the first one that we see is going to be our cash account, and then our accounts receivable. They're going to be sequenced numerically. We're going to introduce ledgers now when we start introducing T accounts, And then we're going to kind of back up a little bit when we get to chapter 6 and talk about journalizing and then posting to those ledger accounts. More about that later. Once again, here's that typical numbering system. Now here's where we get into kind of the heart of accounting, the double entry accounting system. Double entry accounting is a system used to analyze and record transactions. We have been analyzing transactions. We've been looking at a transaction. We've been deciding which 2 accounts or 3 accounts are affected and if they're going to go up or down. We're still going to do that, but now we're going to learn to record it using T accounts. A debit is an entry on the left side of an account. So anytime we record something on the left side, it's called a debit side. Now you may have different ideas about what debit means. Maybe you think of your debit card. Maybe you think of debt. Maybe you think of owing somebody money. Whatever it might be, throw it out the window, because in accounting, it simply means left side. Whoops, too far back. It simply means the left side of the T account. The T account obviously looks like a T here. And any numbers that we record on the left side are considered debits. A credit is any amount that is going to be recorded on the right side. An easy way to remember this is debit, credit, DC, Washington, D.C. So know that it's going to be in that order. A T account gets its name from being shaped like a T. It's a visual representation of that ledger account. When we start using actual accounting forms, we're going to be using columns, and those columns are set up very similar to our T account, where we have debits on the left, credits on the right. The T account is a tool used to help analyze those transactions. Here's an easy way that I like to think of debits and credits and how you're going to increase those sides. Think of your accounting equation. Assets equal liabilities plus owner's equity. Remember I said it's good to learn them in this order, or learn this equation in this order, because it's going to help you out later. If you were to create a T account under each of these classifications, so I have my assets, and instead of having assets, it might say cash, or it might say accounts receivable, or delivery equipment. The T account for an asset is always going to increase on the debit side. Remember how we had them in our columns and we would put a plus symbol and then write the amount that that particular asset was increasing? Well, we're no longer going to put the plus symbol in there. Instead, we're going to decide, is it going up or down? If the asset is going up, we're going to record it over here on the debit. If it's going down, we're going to record it on the credit side. Liabilities and owner's equity, they're actually going to increase on the credit side. So if my capital account is going up, I'm going to record it on the credit side. If it's going down, I'm going to record it on the debit side. Here's how the equation comes into play. Since asset is on that side, is on the left side of the equation, that means we're going to increase assets on the left side. Since liabilities and owner's equity are on the right side of the equation, we're going to increase those accounts on the right side. Now I have two terms here, normal balance on both sides. You are going to keep track of the running balance for that account on the normal balance side. And the normal balance side is always going to be the one that we normally increase. So in addition to writing down the numbers, sorry it's hot in here, I'm sweating. In addition to writing down the numbers, we're going to figure out what their total balance is, and we're going to write it down here at the bottom. We're going to be working through some of these. Hold on, getting a little crazy over here. Of course, liabilities and owner's equity, they're going to have a normal balance on the credit side. Here's some of those same illustrations. The increase side of an account is the normal balance. When analyzing business transactions, you should apply the rules of debit and credit, and then complete the entry in T account form. We're no longer going to use those columns anymore. We're going to use T accounts. Okay, using the sheet of paper that you were given by your instructor that looks like a whole bunch of T accounts, we're going to work through some of the transactions that we have in our book. Some of those transactions are going to sound familiar to you. We recorded them in the column format. Now we're going to learn how to record them in T accounts. What I'd like you to do is take that blank sheet of T accounts, and I would like you to create a T account for every account that you see in the chart of accounts on page 82. So flip to page 82 and notice that our first one is cash and bank, the second one is accounts receivable City News, accounts receivable Green Company. I just want you to create one for every one of those accounts. You can abbreviate just a little bit. Do not say ARCN, because if you are recording that, it's possible somebody else is going to be using these accounting records and they won't know what ARCN stands for. Notice account receivable I abbreviated a little bit, company I abbreviated, expenses I abbreviated, withdrawals I abbreviated, but it has to be such that somebody else who's not familiar with the accounting records will know what's going on. So if necessary, stop the video and write that in. Okay, now that you have recorded the names of the accounts at the top of each of the T accounts, we're going to start analyzing the transactions and recording them in the T accounts. You're not familiar with debits and credits yet. You're not familiar with which side is going to be increased and decreased. Yes, we've talked about it, but it's not second nature yet. So for a while, I want you to do this. We're going to write debit and credit on every account. DC. It doesn't matter if it's an asset, liability, or owner's equity. It's always going to be in this order. Debit and credit. Let's only do it for the first 9 accounts because those are the only ones that we're going to be using in Chapter 4. In fact, I'm going to zoom in just a little bit here so that you only see those 9 accounts. Now, we want to identify which side of each account we're going to increase those accounts on. These top 6 are all assets. If you recall, assets increase on the debit side. I'm going to put my accounting equation up here so we remember it. Assets equal liabilities plus owner's equity. Assets are on this side of the accounting equation. So it's the debit side that's going to increase. So put a plus next to each of the D's in the assets. And if we're increasing on the debit side, it means we're decreasing on the credit side. Now liabilities and owner's equity are on this side of the accounting equation. So we're going to increase the liabilities and our capital account on the credit side, which means we'll decrease those accounts on the debit side. You can do this as long as you need to. I have students that will use dry erase markers on their desks and put that up there in the middle of a test. You can't do it before the test is handed out, but certainly after it's handed out, just as kind of a reminder. For now, I think you'll find it very handy. Now that we have them marked, we're going to turn in our books to page 88, I believe. 87, excuse me. On page 87, we have business transaction number 1. You'll recognize these transactions. They're the same ones that we did in Chapter 3, except instead of recording them in the columns, we're going to record them on the T accounts. The first one says, on October 1st, Krista Vargas took $25,000 from personal savings and deposited that amount to open a business checking account in the name of Zip Delivery Services. Now I know that your tendency is to just sit back and watch, but I hope that you'll be using your critical thinking here and think about what are the 2 accounts that are going to be affected. Hopefully you identified Cash and Bank and Krista Vargas Capital. What's going to happen to Cash and Bank? Is it going to increase or decrease? It's It's going to increase by $25,000. So I'm going to record that on the debit side. Krista Vargas Capital is also going to increase, but it's going to increase on the credit side. So I'm going to write $25,000 on the credit side. To make sure that I know that these two go together, I'm just going to simply put a number 1 to indicate that this was my first transaction next to both of those numbers. Notice that I have a debit and a credit. With double entry accounting, my debits should always equal my credits. Transaction number 2 at the bottom of page 87 says, on October 2nd, Krista Vargas took 2 telephones valued at $200 each from her home and then transferred them to the business as office equipment. What 2 accounts are going to be affected? Office equipment and capital. What's happening to office equipment? Well, it's increasing by $400, $200 for each phone. So I'm going to record it on the debit side, transaction number 2. And Krista Vargas Capital is also increasing, but it's going to increase on the credit side. Once again, debit, credit, they match. Number 3, October 4th. This is on page 88. October 4th, Zip issued check 101 for $3,000 to buy a computer system. What 2 accounts are going to be affected? Computer equipment and cash. Not capital. We're using the business's cash. What's happening to cash? Well, it's going to go down because we're spending $3,000. And we're spending it so that we can buy more computer equipment. So computer equipment is going to go up on the debit side. We have a debit in computer equipment, credit in cash. They balance. On page 89, business transaction 4 says on October 9th, Zip bought a used truck on account from Coast to Coast Auto for $12,000. Notice it says on account. What 2 accounts are going to be affected? Should be accounts payable, Coast to Coast Auto, not Beacon Advertising, Coast to Coast Auto, and delivery equipment. What's happening to delivery equipment? Is it increasing or decreasing? We're increasing. We're getting a new delivery truck. We're increasing the value of our delivery truck by $12,000. It's transaction 4. And what's happening to accounts payable Coast to Coast Auto? Well, we're increasing our debt. We're increasing the amount that we owe Coast to Coast Auto by $12,000. Transaction number 5 says, on October 11th, Zip sold 1 phone on account, they sold it on account, to Green Company for $200. What 2 accounts are going to be affected? You should have identified accounts receivable Green Company and office equipment. What's happening to accounts receivable Green Company? We're increasing Green Company's debt to us. So I'm going to write $200 because on the debit side because we increased their debt. And office equipment is going to go down $200 because we're getting rid of one of our phones worth $200. Turn to the next page. Transaction 6. On October 12th, Zip mailed check 102 for $350 as the first installment payment on the truck purchased from North Shore, that's a typo, it should be Coast to Coast Auto, on October 9th. What 2 accounts are, first of all, have we purchased any new delivery equipment? No. We're just going to be paying off part of what we owe. So what 2 accounts are going to be affected? First one is cash in bank, and the second one is accounts payable Coast to Coast Auto. What's happening to cash in bank? Is it going up or down? It's going down. We're decreasing the amount of cash by $350. And then accounts payable, Coast to Coast Auto, is it going up or down? It's going to go down. We don't want to owe them that money anymore, so we're going to decrease our debt by $350. And finally, transaction 7 says on October 14th, Zip received and deposited a check for $200 from Green Company. The check is full payment for the telephone sold on account to Green Company on October 11th. Did we sell them another phone? No. Rather, they're just paying us for the phone that they bought a while ago. What two accounts are going to be affected? Cash in bank and accounts receivable. What's going to happen to cash in bank? Is it going to increase or decrease? It's going to increase by the $200 that Green Company is going to give us. So transaction 7 is $200. Accounts receivable Green Company, is it going to increase or decrease? It's going to decrease because they no longer want to owe us that money. Now that we've completed those 7 transactions, if you recall, we put a debit and a credit, hopefully, on each transaction. For number 7, here we have a debit and a credit. Both are $200. If I go back to number 5, I have a credit and a debit, both for $200. You should be able to do that with all 7 transactions. It's difficult to double check by going one transaction at a time, so we're going to calculate some normal balances for each of these accounts. If you recall, the normal balance side is the side that that account is increased on. So all of the assets, their normal balance is going to be on the debit. For the liabilities and owner's equity, their normal balance is going to be on the credit side. We're only going to record one balance. That balance is going to be a reflection of how much they've increased, and then a subtraction of what they've decreased. And then we're going to record it on the normal balance side. So in the case of cash and bank, we would take $25,000, you can get your calculators out, $25,000 plus $200 minus $3,000 minus $350. If you punched it in correctly, you should have a balance of $21,850. You would write it on the normal balance side and indicate that it's the balance. You may want to circle it. I like to put a B equal. You can do whatever you want as long as we know that that's the balance. You're going to go through each of these 9 accounts and record the balance. And I'll meet up with you when you return. Okay, check your work. Did you record the balances on the correct side for each of these accounts? And did you calculate the correct balance? Hopefully, I did it correctly and you did it correctly, but there's no guarantee. I mean, unless you have an answer key in front of you, you aren't going to know if you did it correctly. We have to check our work, and you're going to get in the habit of checking your work all the time. The way we're going to check our work is by comparing the debits to the credits. I'm going to do that. I'm going to zoom out here a little bit. Oops, zoom in maybe, out. I guess that's what I want to do. I'm going to use one of these T accounts down here at the bottom. And I know it's going to be a little bit difficult for you to see everything here, but do the best that you can. In this T account down here, I'm going to list the debits on one side and the credits on the other. And I'm just simply going to go through each of these accounts and record the balance on the normal balance side. So cash and bank, I had a balance of $21,850. Accounts receivable news, 0. Accounts receivable Green Company, 0. Computer equipment, $3,000. Office equipment, I'm going to move it up here a little bit, $200. And delivery equipment was $12,000. Those all had normal debit balances. Now I'm going to record my normal credit balances. Accounts payable Beacon Advertising had a balance of 0. Accounts payable Coast to Coast had a balance of $11,650. And the balance for Vargas Capital was $25,400. take a moment to now add up. I'm going to zoom in on these. These are all of our balances. Add up the debits and the credits. Hopefully you will end up with the same number on both sides. But go through the process of actually taking your calculator and adding them up. If you got both sides to total $37,050, great. This time you got them all right. Sometimes you won't. You actually don't assume that if this is $37,050 that this side is going to be $37,050. You have to add up both sides. If they don't match, then something is wrong. And you're going to have to go back and try to find the error. The best way that I can tell you to try to find that error is to just go through transaction by transaction and make sure that you have a debit and a credit that balance. So I would go to transaction 1. I have a debit of $25,000 and a credit of $25,000. And then I find transaction 2. I have a debit of $400 and I have a, where's my transaction 2? I have a credit of $400. And I guarantee that the majority of you, your error is going to result because you maybe recorded both of them on the debit side or both of them on the credit side, or maybe you recorded one and not the other one. In some cases, it might simply have been just an addition error, and you'll want to go through and recalculate those addition and subtraction calculations for each account. But you can't say you're done until these balance. Okay, for those of you that have decided to stick around and work problem 4.4 with me, make sure that you are on page 35 of your workbook and then on page 97 of your textbook. At the top of page 97, we see our chart of accounts for this problem. There are 7 accounts. You're going to write those account names on the 7 T accounts that you have in your workbook. You can follow along with me or do them on your own. Cash and bank. Accounts receivable, Valley Auto, office equipment, office furniture, car wash equipment. Notice that at the top of the page it says that this is a business called Hot Suds Car Wash. So of course they're going to have some car wash equipment. Accounts payable, Allen Vacuum Systems. And then finally, Regina Delgado. You don't have to put the first name, but you definitely have to have the last name, capital. Since we're still unfamiliar with debits and credits and increases and decreases, let's label all of them with a debit and credit. And then let's first identify our assets. 1, 2, 3, 4, 5. These first 5 are all assets. If you recall, we increase assets on the debit side, so put a plus next to the debit. That means we decrease the assets on the credit side. Then our liabilities and owner's equity or capital accounts are going to be increased on the credit side, so put a plus next to the C's and a minus next to the D's. Now that they're labeled, let's take a look at our transactions. There's 5 of them. Starting with the first one, Regina Delgado invested an additional $40,000 cash into her business. What 2 accounts are going to be affected? It should be cash in bank and Delgado Capital. Is cash going to increase or decrease? It's going to increase. So we're going to write the $40,000 on the debit side and mark it transaction 1. Delgado Capital, is it going to increase or decrease? We're going to increase the amount that she's worth. She's worth $40,000. Transaction number 2, bought another car wash system on account for $27,000 from Allen Vacuum Systems. So they bought it on account, which means they didn't pay money yet, they're going to in the future. What 2 accounts are going to be affected? You should have chosen car wash equipment and accounts payable, Allen Vacuum Systems. What's happening to car wash equipment? Well, it's increasing. The company now has more car wash equipment worth $27,000. So we're going to write that on the debit side. Indicate that that's transaction number 2. And accounts payable, is it increasing or decreasing? It's increasing because we are increasing the amount that we owe Allen Vacuum Systems. Oops, that's a 2 there. Transaction number 3 says Regina Delgado transferred some of her personal office furniture valued at $3,750 to her business. Notice that we have office equipment and office furniture. Office equipment would be things that are tangible, that you can touch, but they also help us process information, like a computer or a calculator or a typewriter or a phone. Office furniture is something tangible, something that you can touch, but it's more, it doesn't really do anything other than provide support of some sort. So chairs and desks and lamps might be office furniture. In this case, she transferred office furniture from her home. Which 2 accounts are going to be affected? Well, office furniture and then Regina Delgado Capital. Office furniture is going to increase by $3,750 because the business now has that new furniture. Regina Delgado's capital, excuse me, is also going to increase. I apologize. Because she now has a claim to that office furniture or the value of that office furniture. Transaction number 4 says Hot Suds Car Wash purchased additional office equipment for $7,500 and they made the payment, or the payment was made by check. So this time they're writing a check and they're going to get the office equipment. Which 2 accounts are going to be affected? You should choose cash in bank and office equipment. Cash in bank, is it increasing or decreasing? It's decreasing because we're writing a check and giving the cash away. It's transaction number 4. Office equipment, is it increasing or decreasing? Well, it's increasing because we purchased it and we now have ownership of it. So we're going to record that on $7,000 on the debit side. The final transaction, Hot Suds Car Wash sold some surplus car washing equipment on account to Valley Auto for $1,200. So they had too much car wash equipment, they weren't going to use it, they were going to give it, or not give it away, but they were going to sell it to Allen Vacuums, no, I take that back, Valley Auto, because they needed it. What 2 accounts are going to be affected? Since they sold it on account, it's going to be accounts receivable Valley Auto and car wash equipment. What's happening to car wash equipment? Is it increasing or decreasing? Well, we're getting rid of it, so we're decreasing by $1,200. What's happening to accounts receivable Valley Auto? Are we increasing or decreasing? We're increasing because we've just increased the amount of debt that they have to us. That's how much they're going to owe us. Now that we have those 5 transactions, we could go back to each transaction. We can find a 1 and a 1 and say 40,000, 40,000 debit, credit. And find our 2 where it says 27,000, 27,000 debit, credit. But what if you have 100 transactions? That's going to get a little tedious. So we're going to check our work by just finding our normal balances and then comparing the debit and credit normal balances. If you recall, you're going to, whoops, hold on a second. You're going to start with your plus side. Doesn't matter what kind of account it is, just always start with the plus side, add up all of the pluses, and then subtract all the minuses and record your balance on the plus side, which is your normal balance side. In the case of cash and bank, 40,000, oops, I messed up, didn't I? I already did. Number 4, look back at number 4. It was not 7,000, it was 7,500. I'm going to change that right now before I move forward. $40,000 minus 7,500 leaves me with a balance of 32,500. I want you to go through the rest of the accounts and record the normal balance. I'm going to do them quietly on my own. You can check your work as you're moving along. Stop the video if you need to get caught up. Once you have all of your balances, check to make sure that you have them recorded on the normal balance side. The 5 assets are on the debit side, the liability and owner's equity are on the credit side. Now we need to check our work by comparing debits to credits. I'm going to do that right here. I'm going to create a little T account, put my D's on one side, my credits on the other. And I'm just simply going to copy the balances. Cash and bank was 32,500. Accounts receivable Valley Auto is 1,200. Office equipment was 7,500. Office furniture was 3,750. And car wash equipment was 25,800. Now I move to the credits. I have a balance for accounts payable Allen Vacuum System of 27,000, and Regina Delgado capital is 43,750. At this point, stop your video, get out your calculator, and add up your debits and your credits. If you did all the transactions correctly, you should have a balance of 70,750 on the debit side and 70,750 on the credit side. If you didn't, and make sure that you add up both sides, if these did not balance, then you need to go back and find your errors. Some of the things you could do, you could recalculate the balances to see if you added them correctly. You could check your transactions, 1 and 1. All right, do we have a debit and a credit? Are they the right amount? Or do I have 4,000 up here and 40,000 down here? That would make a big difference. Did I happen to put 2 debits? Maybe I recorded 40,000 over here and not there. Check to find your errors, and once you find your errors, recalculate to see if the debits and the credits balance. At this point, I want you to try some on your own. So I want you to turn to problems 4-5 and 4-6, work them on your own, check your answers, work with your classmates to see if you can find out what you're doing wrong. Don't just copy, don't just assume that you know what's going on by asking your table mates to tell you what's wrong. You've got to do some critical thinking and figure it out on your own.